Good evening, ladies and gentlemen. After the crazy week we've been having in the market, it just keeps getting crazier. Today, the big three reported earnings: Google, Amazon, and Apple, and we're going to be going over their earnings, looking at the bear and bull case for all of them, along with, at the end of the video, doing some of your requested ticker symbols, so stay tuned for that. However, before we start the video, quick legal disclaimer: this is not financial trading advice. Do your due diligence in the market. All risk you take in the market is your own. Remember, you put yourself in the trade, no one else did. Alright, with that, let's get into the video. So we're going to start off with Apple. Apple reported earnings today. We're going to go into its earnings report first on Earnings Whisper, link down below. Great site for earnings. The reported earnings was $1.88, earning whisper of $1.96, with the market consensus of $1.93. So Apple missed earnings on EPS. However, we don't put a lot of faith into that. We look at the revenue and guidance as two key drivers. Reported revenue is $117.15 billion, estimated at $122.05 billion. So that's about a $5 billion loss or miss on Apple. And also, if we reviewed their guidance call, this is where it's the trust me now because I said I would do it, but then I forgot I did it scenario. Apple said, oh, trust us on last quarter that we'll have better demand this quarter, and now we're getting the same statement from them. So let's see how investors react. So starting off with Apple, your bull case is you're in a massive uptrend. You have continuation to the upside, nice uptrend on Apple going up. We're over the 50 daily. We are now over the 200 daily as well on the close, and we even pierced above the 50 weekly moving average. So it is definitely a bullish sign that we have the potential to go higher. However, on Apple reported earnings, it went down about $5, basically filling the gap where we were today. We gapped up, pushed up, we got over the 50 weekly, and then we shed all that gains right back down. This was on a good earnings expectation. So when you see charts gap up like this with this massive gap right here, it's because they're expecting good earnings and that people are pricing in the future. Now, trying to get in before the move, when the move doesn't happen and disappoints, we have to see what Apple does in tomorrow's open. There's two scenarios. It's kind of a 50-50 scenario because you lost this massive area of resistance. You could come back up during the day and then basically come right back down, or you can continue downward on open. It's two possibilities. I think the market right now is on an absolute tear, and that there's not a lot of shorts still closed out. I think there's still more potential to squeeze shorts out of this market. So there's definitely potential to continue higher, but there's also, we want to fill in this area here with some price action. You don't really want to have that massive gap. I'd definitely be looking at some point for Apple around the $144 if I was to be bullish on it or start getting bullish on the company. That's where I'd be looking possibly to enter off a pullback, because the market as a whole really is just tearing up anyone that wants to be bearish. So we have to look at what the market is telling us. The market says it wants higher prices. However, we do have a news catalyst tomorrow with ADP non-farm payrolls with unemployment numbers. So that could be some catalyst to affect the tech sector, but also market could shrug off the entire news like they shrugged off the FOMC meeting and basically said, we don't care what you have to say. We're going to do what we want to do. So as of now, you're in an uptrend on Apple. Let's see what Lux Algo is doing for Apple. All right. So we are nearing a supply zone on Apple here. If we look at the daily chart, we came up, we basically closed right in the middle of a price action zone, which is your supply zone, was the big prior sell-off where we sold off into December, November to December, and now we're pushing back above. We are heading back to an area where we consolidated, so we have to see what Apple's doing. But if we break the $142 range, or even let's say the wick on the $141.46, I'd definitely be looking for more downside on Apple. You would be below support, or now we're basically retracing this price action here. So also, if we look at to see if we have any harmonics on the chart, we have an A to B, B to C leg, and that would project Apple up to about $164.58 on completion. That would return us basically back to the August highs or near the August highs, which there is a possibility for that. However, we would have to complete this pattern, get above a lot of resistance. I think Apple has the potential to get up there. However, I do see a pullback coming for Apple just because of a couple factors, and let's go over those quickly now. RSI is to the upside here. We're starting to head up into oversold. You have a divergence on the oscillation, along with MACD kind of crossed bearish, but stock pushing up. So there is a slight divergence there. The MACD has the potential to curl higher, but I would be curious to see on open what we do. It's really going to come down to Friday's open, the first 3 hours from that 9:30 to 12 o'clock time frame, where there's a lot of volatility and a bout of volatility. so we can see what the price action does if we fill this gap on Apple again. So we gapped up, came back down. If we fill in this price action with actual price action during the day, I'd definitely be looking for more upside and more potential to squeeze out shorts. But if we start breaking or continue to sell off the whole day through Apple, and maybe ADP farm non-farm payrolls comes as a catalyst for that, I want to see where Apple's stock actually goes to and finds bottoms. We'd be looking for bottoms at the, like we said, definitely looking for bottoms around the right around the 141 area, and then also the 138 would be next support, followed by 143.17, which is basically the stair steps that we created. I would love to see a retracement down all the way to 141, and also if we take a Fibonacci retracement of this massive move up, we would find the 50% retracement to be right around the 137 range. You could see, because how SPY and Apple are correlated, SPY usually likes to retrace 50%. I definitely could see this area of 138 to 137 being filled in. It would also coincide similarly to the November push up on CPI in that area. So this area of 138 to 137 on Apple would definitely be an interesting area of support. And then if we look at the 4 hour to see anything, oh, hello. So we see areas where we have two price zones right there. So definitely be looking at how these areas are interacting. My theory on Apple is that we're going to come down on open, possibly into tonight with the S&P starting off red, could be down 1%, probably push down into this area of 141, bounce and keep heading higher. Now, if we start breaking 141, I definitely would like to see 140 be tested or possibly retested and hold. If we start breaking 138, that's when you want to basically take a step back and reevaluate the trade. So next, we're going to talk about Google. Reported earnings of $1.05. Earning whisper was $1.14 with a consensus of $1.14 as well from the market. Missed by about 9 cents. The reported revenue was 76.05 billion, estimated 76.66 billion. Not a huge miss, that's a slight miss on revenue. However, let's take a look what the charts are telling us. So Google, similar story to Apple. We have a massive gap up. Actually, what percentage is this on the gap up? So Google gapped up 5% and then kept pushing to 7%. So basically, guys, this is your earnings. Our earnings happened today on Google. The market priced in Google's earnings and then kind of got a meh response from Google on earnings, where it went up, it went down. So definitely be looking to, like similar to Apple, to fill in this price zone area right here. I'd definitely be looking at Google for support of 101 to about the $99 region. We have to see how it interacts there. Definitely be looking bullish on Google. Now, if we break these price zones of 199, I'd definitely be looking for the retest of the $96 region, which is our weekly to 100. Google pushed up against, and we haven't really retested. Also, if you're being like true bearish scenario here, if you start getting down to the $96 range and start trying to break that 200 weekly, and you probably land up filling this gap in a hurry. However, seeing how the market's in an absolute tear, you don't want to fight the trend right now. The market is basically saying we want to buy every single dip in existence. And that's why I believe, depending on how we start tomorrow, we could see Google retest the $100 price point, because that's a mental note. And also, if we look here, it's the $101.50 is an area that we had significant price action. This was resistance here, this was resistance here, resistance here. I'm classifying that as resistance just because you gapped up. You had a massive gap on Google, which was truly unexpected. So definitely that $101 to $100 region area is where I'd be looking for maybe possibly buying opportunities. And now let's look at the Lux Algo. So Lux Algo basically has Google on the daily pushing right into a reversal zone, which is classically known as the area that you exit stage left. So if you're in Google, if you closed out today on this massive push up, congratulations, you took profit beautifully right in a reversal zone. It's also telling us to sell in this area. So where is it also telling us to buy? Yeah, it's telling us to buy down here at the $88 range. Also, the trend is sitting right about 100 for a trend catcher. This is an area where I would like to see Google bounce at 100. So definitely going to be something that I'm going to keep an eye on. If we look at the 4 hour to see if we have any more intraday price action forming. Similarly, 102, 135 right here at the 101, 115 with a zone sitting right in the $100 to $98 range. So if we come back down, like we said, if depending the catalyst that we get, maybe farm payrolls, I'd definitely be looking to pick up Google at $98.50, maybe for some put selling opportunities, because the market would move down sharply, and we have to see. And it's all really going to depend on price action, guys. I think the daily has the ability to keep pushing higher for one reason. Your MACD is starting to cross over. However, since you gapped up, now came back down, you're going to need to see what this does. RSI may be getting to the overbought side slightly, so then we need to see how this interacts with this pullback after earnings. And frankly, we could go straight up. That's a true possibility right now. Tech is pushing really, really hard. If it starts pushing any harder, I think you're going to start squeezing out even more bears that were in the market. And to me, you birth a new bull market today. 416 is the start of a new bull market, and S&P ended at the $416.78 range. Obviously, it's lower now. One of the things I observed, and we're going to go to this quickly, with Google and Amazon and all these big names selling off, you're only down $2 on the S&P. You're not really down crazy. So why would we expect this whole move to get reversed completely? What's going to be the bearish catalyst? ADP on firm payrolls? I'm going to say that's a slight pullback catalyst. What the charts are telling us, they want higher. You're pumping up, flagging, and you kind of pumped up and sagged now. So we got to see where we go, because if we form a nice base here, it'd definitely be something I'd be looking up to pick some short-term swings on. You don't really have a lot of news catalysts next week, almost none at all. Heading into CPI week the following week, but take the nice swing trade, take what the market gives you. So for Google, like we reiterated, let's go 4 hour, definitely be looking at this area for Google. It's a nice price action. If we start breaking that area, then we're definitely going to be looking for lower prices, definitely coming back to this gap fill, probably heading to $93 on Google. So we have to see what the market does, but that would be a significant retracement from where we are right now, estimated at, we're going to go from the close today, guys. If we're coming down to those regions, that would be a 13% sell-off. I don't think Google has that in it to go that low on open. If we were to open here, we'd be down 5%. But remember, today Google was up 7.27%, so it's kind of a little ridiculous move. These large moves kind of get retraced anyway, so if you were bullish into earnings, your day was today. Today was when it started selling off. On the 4 hour, you have MACD pushed up higher, RSI, so there's possibilities here that goes bullish or bearish. I'm leaning more towards the pullback scenario than the true bearish or true bullish situation. I think you had a massive push up that needs to be recorrected, go through a correction phase, maybe bounce at 101.58, or we come back to this price action zone where we basically pushed up from and retest. We have to see. Next, we're going to go into Amazon and then viewer recommendations. So guys, we're going to go over Amazon's earnings now. Earnings reported of 21 cents. Earning whisper was 19 cents with a consensus of the market of 15 cents, so it'd be DPS. The reported revenue is 149.2 billion, and the expected revenue was 145.4 billion, so it was a beat of about $4 billion, so that's good. We got good 2 check marks. However, it did see some negative guidance, or mixed guidance, I would say, along with a similar story that Amazon gave you earnings today, not tomorrow. So it pushed up 7.5% almost on the market. It did get to the 200 daily and then got basically squarely rejected off of it. So another scenario that I didn't mention in Apple and Google, but just came to mind now, is what happens if we push up to the 200 daily and then kind of get rejected off of it. That could be a possibility where we're gonna see maybe an exhaustion rally. I think whatever happens, you get the opposite of. So if you push up on open, I would be expecting more downside. If you push down on open, I would expect more upside. So again, Amazon, where I'd be looking possibly for picking it up, $101.37. If we break that, I'd be looking to try to fill this gap down here, almost to the $96.97 price. So let's see what it looks. Algo is telling us same story, similar. You actually had this gap zone right here that you kind of just said, I'm gonna go and gapped up. Now you're on earnings are kind of in this area, so I could be seeing $106 trend catcher zone pickup maybe, but I'd be looking more to the buy side around the $93 for Amazon, or even the $100 just because it's a mental barrier. We have to see. Let's take a look at the 4 hour, see where we can see some price zones. About $101 to $98.92 is where we pushed up. I do think that we could fill this gap in, come back down here. That would probably put Amazon down about 10% tomorrow, which if people in this market see us as a stock down 10%, they definitely are going to try picking it up. I think the big three did have too much of a run. These moves that are sharply up usually get reversed. I could see some short-term bearish side to Apple and Amazon coming back down to this region, trying to find buyers. Now, if we break that region, I'd definitely be looking to pick it up around $92. Probably a nice bullish play right there. At $92, you would be also in the daily zone and be a nice reversal. However, we have to check what also the other indicators are telling us. MACD crossing bullish, so there is possible continuation, but you could diverge again. You had a divergence on the oscillation, and RSI was heading to overbought already. So tomorrow's open will tell us a lot, along with what the market's trying to do. Just a little sneak peek of what I did with Amazon. Whenever I see a stock that has almost 171% implied volatility on options, I'd throw an iron condor on there, and my strikes were 90. My short strikes were 96, 125 for tomorrow expiration. This works. I found this strategy to work really well with Thursday expiration companies because one, the IV is jacked up like no tomorrow, and the possibility of the company basically moving, if we look at where I picked it up, it's pretty much on open, 13% to 12% in one direction. Being a massive $1 trillion company, I definitely would need to see some really bearish scenario or really bullish scenario to send it up. And looking at earnings this quarter, it's been kind of muted. You get the bullish and the bearish response both in earnings, so it's really fascinating to see how this works. Burning basically the IV and the theta burn because it's one day expiration. You close it on open, collect 75% of the profit, and move on. So I'll report out on the weekend deep dive video that we also do on the weekend. Stay tuned for that. If you guys like this type of content, hit subscribe, throw a like down below. We try to cater to as many people as we can. And speaking of catering to as many people as we can, we're going to go over some viewer requests. So Tony Myers, you requested PBF, KFY, and SBGI. So we're going to start off with SBF for you. So, sorry, PBF. I can't spell today. PBF. So overall, PBF, you came down to a region. You're starting to head bearish on the trend. You're kind of in the middle of this upper and lower, almost forming a symmetric triangle here. If I do a quick glance at it, so you have the option to break to the bullish side or bearish side. You do have a support zone here. So my prediction for this company is you head lower here, bounce, maybe come up here, depending on what momentum you come up to. This may break up the way that you draw the channel for this and price target. If you break up there, I'd definitely be looking for like a $55 price target for it, get out in the reversal zone. If you break down to the downside, I would definitely be picking it up in this $25 range. But right now, it's kind of in almost a sideways consolidation for it. It'd be an interesting trade. Now, if we look at the 4 hour just to see where we may be getting that bounce and more intraday, again, this zone right here, right around $37.93. It'd be an interesting location to pick up because you could just put your stop loss basically right below the swing point high right here. And just taking a glance at it real quick, you may even have a harmonic pattern on here. A to B, B to C, projects up to, you completed that at $45. And let's see if we can create another one. So A to B, let's say you don't break the swing point high down here, and you come back, let's say the middle of the zone, targeting $46.81, plus the breaking of that channel, you definitely would complete that. However, you have a zone up here. So just to summarize for this one, first resistance level, I would say would be the top of where you sold off, $44.75. Next resistance, $47.56. Your supports are going to be probably around $38 a share. If you break below the $36.50 level, I would definitely be looking to go more bearish on the company or see a bounce. I'd be then looking for the bounce on this wedge. If you break that, then heading down to $29 or $26. However, you really have to see how the intraday is playing out. I do believe that you're going to get this bounce. Just looking at the MACD right here, you're starting to cross. RSI is almost to the overbought side. If it comes down to this swing point here, about 37.69, I'd definitely be looking to pick it up. If you're already in it, you may want a dollar cost average down for the push up, but overall a pretty bullish trend on the company and a lot of bullish potential. Next, KFY. So this one, if you're in it, get out now. As I say it, you're in a reversal zone here. Let's look at the daily, what's saying. You kind of had a nice push up, MACD crossing over here, along with the RSI heading into overbought. I probably put my sell order right here on $60, between $60 and $59.90. That's when you're going to hit that reversal zone. You could do like a 25, 25, 25 split if I'm in this position, get out at $59, next sell order at $60. Followed by $61. Basically, as it pushes through, it hits all your sell orders. You get out why the momentum is going up. Now, if you're looking at the next resistance level for that company, if you by some miracle manage to get up to $65, you're definitely going to be hitting this price action zones here on the daily, plus a reversal zone. That would be a strong selling opportunity if you're looking for that. If you're looking for a buying opportunity on the daily, you're looking at $50.49. I don't believe we get there. I think you'll create a zone right around this $53 range. Now let's look at the 4 hour real quick. 4 hour, you pushed through the zone and validated it, pushing into the momentum. You do have two gaps here, so if you start coming down, you're definitely going to fill these two gaps right here. It could be some selling opportunity for you, along with the first area that I'll be looking at is 53.89, second area for support 52.82, and like we mentioned before, the $50 range, swing point low from before of 49.54. That's definitely where I'd be looking to be cautious if it starts breaking it, because you're going to start making you have lower lows here. So once you start invalidating these lows, you're going to start swinging bearish. So pretty good opportunity here to continue higher, but also I'd be looking at possibly getting out around this region up here of the $60 range. However, it could go higher. These zones don't necessarily mean that it's going to reverse right there. It's just a high probability and where you might want to look at different strategies to take advantage of that. And last but not least, SBGI. So SBGI on the daily, this is one of those that we just talked about. You had a massive push up and you're in that reversal zone with an inverted hammer. This has a 75% chance, in my opinion, of ending poorly for anyone that's trying to buy it up here. I think if you're in it, this is a perfect location to take profits. You have an inverted hammer. We have to see how price action confirms to the downside tomorrow. If we start heading downward, I'd definitely be looking at somewhere consolidating around the $18.35 mark or heading even lower. It really depends. It's had a massive move up, so usually I always say when you have these massive moves up, they like to retrace about 50%, and the 50% retracement will put it right around that $18 that we discussed. So overall, it's a bullish company right now. And then if we look at long term, it does have a sideways. It kind of been trading sideways for a long period of time, had ups, down, up, down. So I definitely be taking advantage of the swing right here to get out, or if you're interested in possibly shorting the company, that may be an opportunity. If we look at the 4 hour for potential supports, just because you created all this stair stepping, you may have a support around $20, next support around $17.93. I would even say you may have a support around $19 itself. You really have to see where the company can go. So with that concludes that. If you guys liked the video, let me know what you liked about it. And also if you have ticker requests, as you see, we try to review the ticker requests as soon as possible. So throw them down and we'll try to get to them, like I said, as soon as possible. Throw a like if you guys liked the video, and a comment if you didn't like it. Like to tell us what you didn't like, tell us what you liked. And with that, I bid you farewell.